Hello guys, welcome to you. So I just wanted to discuss a question that one of the subscriber was asking about how you can find stocks with good premiums, right? With high premiums. So that was a question that I wanted to answer. So in this video, you're gonna find out how you can easily do it. There are multiple sites available to do it, but now that Robinhood has this feature inbuilt, it's pretty straightforward to directly use Robinhood to kind of find these stocks, right? So that's what we're going to discuss in this video. If you are interested, please stick around. We are going to discuss all about that. Okay, so I'm in my account, right, and this is TQQ, that play that I am doing, and this is one of my kind of go-to ETF because of the good premium that I receive on this. I do mind that this is a leveraged one, so that's why the premium are a little bit on the higher side, but there's always a lot of volatility that you would see. So if you are not prepared for that much volatility, then you can choose to go with just QQQ instead of TQQ, right? This is a 3x leverage. So this is the one that I'm doing for next week, right? And if you see, I collected about $95 for this, right, on for the, and it's expiring next week, right? What you have to look at here, right? The why the premiums are high is directly kind of correlated to how volatile that stock or ETF is, right? If you look at here, right, the implied volatility is close to 50%, right? So anything more than 50 or more than 100 is kind of, you can consider them as a good IV, and that's why you see more premium on those kind of stocks, right? And if you know this Vega, right, how does this kind of impact your prices here is decided by this Vega, right? So if let's say instead of 45, tomorrow the IV goes to 46%, so for every 1% move here, your price of this premium is gonna increase by this amount, right, which is $2, right? So that's what the Vega is, and this is one of the Greeks that is related to the implied volatility, right? So there are a lot of math that goes behind the calculation, but this is a pretty straightforward calculation that you can see. But to arrive at this particular value, there are a lot of math that goes behind this. I can make a quick video on all the Greeks that you see here. If you are interested in that, then please put a comment with your questions, anything related to the Greeks, and I will try to cover all of them in my Greeks video. Okay, coming back, question on how you can actually find the high premium stocks and ETFs, right? So for that, what I do is you can make use of this custom screener that you see. You click on the custom screener, it will put you in this screen, and here there are some options, right? So let's check them out. So what you can do here is, the first thing is you go down and in the options category you would see implied volatility, right? So this is what we are interested in, and like I said, the implied volatility you would want somewhere around something like, let's say, more than 56 is okay, more than 50 is fine, and you do not want to go too high because there are some kind of crappy stocks, I would say, which you would find even with like 200-300% volatility, right? So those you do want to stay away from them because they are kind of manipulative stocks, and mostly the pharma companies go in that kind of category, or something else would be going on. So we don't want to go too high on the IV. So safe kind of range is I would say less than 200 is okay. So you do something like this, right? So that would give you a good kind of high premium, and they're not too risky as well. I will come to the actual point that you need to take care. So I will discuss that right at the end of this video, so do stick around. There's few more things that you need to take care. So one is this one. So once you have that, that's your first filter. The second one that you wanna do is the price, right? So this is gonna give, this is right now, if you see, right, this is basically giving you all the stocks. It's sorted by market cap, which is good, which is a by default sort. And but if you look at the prices right here, it doesn't for this, right, if you wanna sell put, for example, in this, you have to have almost $90,000 as a collateral. So if you want stocks which are not too high in the price, because for this kind of stock, like I said, right, you will have to have a huge amount of collateral. And if you don't want to do that, there is a way quickly to find out the stocks in your range or the range you are comfortable with. So this is, right, the share price. So what you can do is you can use, like, say under 20, right? So as soon as you select under 20, now you can look at these, right? So this is your good heavy sorted market cap, because that kind of gives you a good kind of companies which are not too small cap or kind of pink sheet kind of companies. This is gonna give you sorted by market cap, right? So that gives you a good confidence that they are at least a good company wise, and they have a good premium, because the IVs are good, right? So this is a fairly kind of a good list. If you are already familiar with some of these companies, then you can go with that. So let's say Robinhood itself, right? So we can or you can say Warner Brother, right? So let's say Robinhood. If you want to go more detail here, you see, right, this IV is 82. One thing that like I said in the beginning, one thing that you wanna do, make sure is, once you have that pulled in, right? So let's say you are in this Robinhood, right? You do want to check when is the earnings, because earnings is the primary reason where the IVs are really high. So like you see, right, this is May 8th, and this I'm recording on May 3rd, right? So that's what if you look at anything, any options here, right? So let's say we do put for next week, right? So that's gonna give you a high premium, and the reason is, so if you look at right at the money, right, you're gonna receive almost 124. And if you look at from percentage terms, this is like 124. And how much you are putting in collateral? You are only putting 1800, right? So that's, so you are basically getting almost 7% a week, right? So if you do that, if you think about this, right, there are 52 weeks, and if you do 7% a week, so you're gonna be like 360% profit, right? So that's unrealistic, because why the premiums are high here is because of the earnings. So you can still play this, and as I mentioned, right, the premiums are really high during the earnings season, and as soon as the earnings are done, the premiums are go down. And why it goes down is because of the IV, because the IV goes down. So let's say from 125% IV, right, it goes down to 100%, so 25% decrease, and this Vega, right, kicks in. So how you calculate is this 25 you can multiply with this one, and that's the new price of this, right? So this price is gonna go down again. So that's the phenomena is called IV crush, and a lot of people do that. So as long as it stays above 18 of post earnings, you're gonna keep all this money to you. So that was it, guys. That was the quick way you can directly use Robinhood. You don't have to go to any third party paid sites and all, you can directly use these filters. There are other filters if you wanna, this is the share price, right? If you wanna do any other filter, if you are interested in any particular sector, if you wanna go with like the analyst ratings, all those things are available along with the IV. You can use any other filters here to further kind of make a good shortlisted company that you wanna do and with a good amount of premium, right? So this is a good way you can use directly within the Robinhood. You don't have to go anywhere outside. So that was it, guys, for this video. And if you have any questions, as always, put your questions down in the comment below. Do like and subscribe, guys, and I'll talk to you in my next video. Happy investing. Bye bye.